لا 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 جي وحدها فلو. Oh. Hello guys, how are you? It's been some time trying to be live, and I just got it after after 20 minutes. So hope you are doing well. I see there is no one is watching, but it's okay. So the subject of today is how to control risk. Now a lot of you guys, when you think about controlling risk, most of the guys think about stop loss, right? Most of you, when we say risk, all the people, they go and they think that it is stop loss. Stop loss is only one of many things that control your risk in your trades. Okay, so in this session we try to deal with these things one by one, and if you have questions, since we are working on that, if you have questions, just ask me and we can explain. Okay, so I see now 4 guys watching. I don't know, 7. Hey Artlov, Artkov, how are you? Wiseman, good evening. I am sorry, I was late. I was a bit late. I have problem with this live thing. So I'm trying to fix that. After 20 minutes or 22 minutes, I get this live. This is mainly the problem with this softwares. Okay, they are not reliable always. Now, as you can see, I see about 9 people watching, which is very good. And I don't see all my guys, so I only see Wiseman and Artkov, but it's okay. The subject of today is very complicated. Okay, complicated. Why? Because hello BTC World. Thank you very much. Thank you very much, BTC World. You know, people, they focus only on one thing, but trading is a whole thing. It has a lot of things related to everything you do in your trading, not just with one trade. So thank you very much, BTC Word. You say the best advisor term of trading. No, I am not an advisor. See, I'm just sharing information with you guys. Try to help everybody. That's why I'm trying to help as much as I can. It's not, I'm not advising, okay? Because advising, it's another thing. So sharing information, it doesn't mean that I am 100% right and everybody is wrong. No, it just, when I speak about my experience. I speak about my training that I do and how I trade. Okay, this is my experience. I'm not speaking about other books or other people what they do, and as most people do. So that's why I want to make you aware of a lot of things. Okay, because risk by itself, it means you are doing, when we say risk, it means that you are doing something wrong. But in trading or in business, in any business, taking risk is the business itself. If you, for example, there are a lot of people who take risk. What does it mean, take risk? It means they have an idea and they do it by risking their money. And this is one of the ignored things that the people, most of the people, they don't know. They think risk is bad. No, risk is good in order to make money. But this risk it shouldn't be too much. Okay? Like for example, I will just give you an example to understand the idea of risk. Thank you, XX Lord Gaiban. He says, thanks for all the help, Kareem. I am 14-year-old and just getting started in trading. Thank you very much. You are so young, but it's okay. It's okay. You can begin to learn. At 14, you can begin to learn, and you have ideas, and you can begin making your portfolio. Your parents can even make you an account, and they can put $100, $200. You can buy stocks and leave them. It's okay. It's a very good thing. Now, thank you, JJ. Nice to meet you. Also, yes, JJ. All of you guys. I just have, as usual, I have just a problem with software, so it takes me 20 minutes to fix that, by the help of of someone else. Okay, to fix this problem. But right now it's good. It looks good. Now, taking risk is making a business. I'm giving you a simple example. Okay, let's say you are working a normal job, just a job, a day shift or night shift, any job, even salary or hourly rate worker. Okay, as in America here, whatever is your job. But you have saved a lot of money. Let's say you have $100,000 and you want to do a business. Understand that all this money that you are putting into this business is at risk. Okay? You are risking a lot of money. Let's say $100,000. You open a restaurant or a dealership or a store, whatever your business idea. Okay, so you spend a lot of money. So all this money that you spend is at risk. You can lose it. Okay, maybe you begin your business and you lose. So there is nothing guaranteed in a business. Okay, there is nothing guaranteed in a business. But those who succeed because they know the business better, they have experience, they know how to do the business, they succeed. This $100,000 becomes millions of dollars and then billions of dollars. Okay? I'm just giving you an example of Mark Zuckerberg. Just an example. They begin Facebook with $1,800. Do you imagine that? $1,800. This is their business idea they begin with. And it's not his money, and he has his friends who are helping him. So all this money is with many people. But check now how Facebook is. This guy with $1,800, he has 30 or 35 or I don't know, $1 billion. Okay? So he risk and then he get succeed. Now, if we go to trading, when we say risk, don't think about stop loss or the trade itself. Okay? The trade itself, yes. Stop loss, yes. I always say that 50% of your business is stop loss. If you don't stop the loss, you will lose a lot of money. And this is how all the beginners, most of the beginners, they lose their money because of this stop loss. Either they don't use it at all, or they don't know how to use it, or they don't know other things. In this session, we try to give you many ideas, concrete ideas. We go through them, 1, 2, 3, 4. We go through them and we try to explain. I begin with the simplest thing that you know, and then I can go to the difficult one. Okay, the first one we speak about is, let me drink some coffee. You should have also your own coffee or drink, because we are saying long and it becomes boring. Okay, So, hello, empty mind. Hello, how are you? Now, the first thing is we speak simple things. The first thing, your trade. Okay, we begin with the simplest thing. Your trade. What is the risk in your trade? Okay, so the first thing is the stop loss. Stop loss when you don't use it, and you say that other people don't use it, and a hedge fund don't use it, and you say, oh, mutual fund don't use it, why should I use it? Okay, I will explain. Hedge funds and mutual funds, they don't use stop loss because they have a big position. He can't have 1 billion or 5 billion position in a stock, and he put $1 to $2. What is it? $2 of stop loss. This is not what the other guys do, because they have a big position, and most of the time they need either they are wrong or they are right, so they stay longer, and if they lose, they can lose a lot of money. But this loss of money, understand that like a hedge fund manager or a mutual fund manager, it is not their money. Okay, if they lose in this a lot, they will make money in other companies, in other stocks, and they have time. They will stay 1 year, 2 years, 3 years. Okay, for us, we are not investors. We are just traders. We have little money compared to the big guys. We have little money. Okay, all the people who are doing day trading and swing trading, they must use stop loss. If you don't use it, it means you have specific strategy, and you have rules, and you are experienced trader. Okay, but it means you assume the risk. This is the thing. Let's say, as an example, let's say you buy a stock at $20, and this is what I do always. So I will give you my way to do the business, and you will see yourself if you are doing the same or no. The first rule is, whenever you buy a stock, put a stop loss on it. Now, don't rush. First, you can go to your chart. Okay, see the chart. Let's say you are searching around 3 o'clock p.m. at the end of the day. For me, it means to get the signal, the criteria that we are using, and then you buy. Let's say you find a stock and you want to buy. You just put where you want to buy it. Right now, you buy it right now. Let's say it's 3:30 p.m. 3:30. Let's say it's 3:30, and you want to buy it, and then you want to put stop loss. Now, what do? In the chart, you make your plan. Where is the purchase price? Just approximate. Just right now, for example, let's say it's $20, 2 cents. Okay. If it goes to 4 cents, or it goes down to $20, 4 cents or 5 cents, don't be scared. We are doing swing trading. We are not doing day trading. You don't worry a lot about this 2 cents or 5 cents or 10 cents, because the stock moves. Okay. Now you decide for the price you want to buy according to the signal. Okay. Then you see how much you want to risk in this trade. Now, when you put a stop loss, this is your risk. Let's say, I give you an example. You buy a stock at $20, and $19 is your stop loss. Now, this is just an example, okay? It's not whatever you find. You find the $20, you put 19. No, stop loss is not like this. The way it is done, we have a lot of criteria, and we are not speaking about this criteria because it is training, and you can get this training from my training. Okay, I'm not speaking about that. I'm speaking just about the risk that you have in this trade. So you have $100, okay, from 19 to 20. How much you are risking? If you buy 100 shares, your risk is $100 in this trade. Now, when you put this stop loss, you go to your broker, you buy the stock, and you put stop loss. So it's okay. It's okay. You buy the stock at $20, you put $19 as a stop loss, you close your account, that's it. And your work is done. You know your risk, and you know what you have done. Now, if you accept the risk that you did, it means that you are okay with yourself. You know what you are doing. Someone told me before, oh no, some people they told me, oh, put $10 as stop loss. Okay, let's go with this idea or with this strategy. Okay, 10%. 10% is a lot of money. Okay, is a lot of money. Understand that if you put for example $10,000 in a trade, you risk $1,000. This is the risk. Now let's say the stock has gone down to your 10% and you hit it. So how much you lose? $1,000 from $10,000. Now if you keep this high percentage or so, okay, if you keep this high percentage, what will happen to you? Most of the time you will wipe out your account in the first year or second year. You will wipe it. Why? Because you take too much risk and you think that the stock will never go down to your stop loss. This is what is the problem. Okay, you have a problem in understanding the stop loss. The stop loss, it doesn't mean that the stock will not go to your stop loss. Okay? This is the idea. It can go at any moment. That's why we put it. Now, why you put the stop loss is just to minimize your risk and exit the trade when you can't afford to lose more. Okay? You can't afford to lose more. Let's say someone says to himself, you say to yourself, no, I will not put stop loss. Most of the beginners, I'm trying to explain. Most of the beginners, they don't put stop loss. That's why sometimes it will be catastrophe for them. Instead of losing $100, this guy, let's say we take another example. You don't put stop loss. Well, we have seen someone who put 10%. We have been, okay? And let's say he lost 10% of his money in one trade. Understand that in the year, you are not going to do one trade. You will do 50, 100, or whatever. Okay? You will do a lot of trades. But if each time you lose 10%, let's say you buy a stock, it goes down. Okay, it's normal. Okay, it goes up or it goes down. It's normal. So you lose 10% of your money. But by a few months, by the end of the year, you will wipe out your account. So understand that you are taking too much risk. Now, another trader, like let's say a beginner, he buy a stock, $20, he doesn't put stop loss. Now, what will happen? Let's say we try to always to see the bad thing, because this is risk. You are risking. Let's say the stock from $20, it goes to $3 after a few months. Now you tell me, oh, why this beginner stays? No, he will stay. You know why? Because some people online, or he read books, that if you don't sell, you don't get the loss. This is a stupid this is a stupid idea that I have seen a lot of guys. They send me emails, and someone told me, see, man, I will not put stop loss. Okay, say, yeah, okay, don't put it, no problem. It's not my business, it's your business. No, don't put it. And he told me, because he gave me the reason. He told me, because if I don't sell, I don't get the loss. But if I sell right now, I got the loss. So I will be more intelligent than the market. Okay? I will be more clever than the market. So I will wait. Okay. How long do you wait? You wait 1 month, 6 months, 1 year, 2 years, 3 years. This is what happened. I have understand that I am speaking about my experience and about the mistakes I have done before, and about right now about some students who have a past when they lose a lot of money because of this. Okay, someone has understand that he has $250,000 he put in a trade. He buy thousands of shares of a company, and he leave it for many years without stop loss, without anything. This company goes down, 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 down until one day it is bankrupt. He lost all his $250,000. Now, why I am telling you this? I say because you are gambling with your money. If you don't understand, how things work, you will be making problems to yourself. You will be maybe in debt. Okay, so try to be careful on this subject, because it is a big subject. Okay, let's stop here until I see what the guys are saying, and then I can continue. Okay, we have seen the first one, which is stop loss, and I will continue with this number 1, stop loss, and then we will continue with other ideas. Okay. So Jeffrey Lang has said something. Thank you, Jeffrey, for contributing to our chat room. Say, hi Kareem, in your gold subscription, do you give out weekly stock picks? Basically, you tell us what to buy. Okay, Jeffrey, I do the weekly stock picks. It's not stock picks. This is the problem. I will show you how to trade. I don't give you stocks, because if I give you stocks, you learn nothing. And why I am here? Maybe I am in YouTube or in training. Why I am here? I am trying, Jeffrey, to make you an independent trader, to trade by yourself. You don't need me anymore. Maybe you stay with me 6 months or 1 year or 2 years, okay? But we stay friends, because see, I have taught before individually. It means by Skype. I taught people before, like many years, and until now they are my friends, and we share information, and they are doing the same as me. It means they know what they are doing, they know what they are buying, and they are making money. But they are individual trader. Now for you, Jeffrey, you are looking for stock picks like other people. Okay, you think that I know the stock that will go up as if I know the future. It's not true. And Jeffrey, we are here to learn how to trade truly. It means when you take my golden subscription, you will find the fine training, the 4 first training for free. All this is about my strategy and how to search and how to select stocks. And you find all the other things with everything in the strategy. And the strategies. What to do, stop loss, how to follow the trend, money management, everything that you need to become a trader. So I am not doing stock picks. Stock picks, a lot of people they do because they don't want to teach people how to trade. Because why you are here? You are here, you want to learn from me how to trade doing swing trading. You want to learn in order to be independent. Okay, independent, it means you do your business. You do your business, you buy, you sell, you know what you are doing. You don't need anyone else. And this is my idea about doing training. Because if I do stock picks, okay, you become following me. Now let's say I stop these stock picks. What you should do? You have nothing. You go to another one and you find the stock picks, and another one, another one, another one. But you spend many years, okay, spending money like this, but you don't learn anything. Okay? So Jeffrey, I'm not giving you an advice what to do in your life. I don't give you this. And I don't give you an advice what to do in your business or how to trade or how to do. But for me, I'm telling you the truth. My opinion is, my training is a practice. It is not stock picks. Okay? That's the deal. Now, if you accept to be trained, okay, when you get the search, you will do the same as me. Because the probabilities of stocks that going up or going down, this you will see it in training level 5. If you want to how to make money from stocks, you should go to training level 5, get this training and study it, and you will know the secret. Okay? You know the secret how all the people make money, like day traders or swing traders. Okay, it's not someone who knows that a stock will go up and then you follow him and then he give you the stock picks and then you make money. This is stupid. How this man knows the future? Maybe he give you the stock picks and tomorrow he will die. He will die, this guy. So how can you? He doesn't know even that he will die or something like that. So Jeffrey Lang, this is my opinion. For my training, all the people here know, and all the people I taught, I am here to teach you how to become an independent trader with my strategies. It means you begin working for yourself. For example, there are thousands of stocks that go up to each day, and maybe you choose a stock that it is better than my stock. It doesn't mean that I will outperform you, but if you use the same techniques, you can find gold nuggets in the market. Now, I will tell you something. Jeffrey, you can go to the golden subscription. I put my live trade for 5 months and 2 weeks, and I put live video showing you how to follow the trend in a stock. This is real thing. I will show you real thing. I'm not showing you theory or sending you. I can send you daily stocks and you can just buy. Sometimes they go up, sometimes they go down. This is not what I am doing here. So Jeffrey, I will just give you my website and my email. We continue the discussion later, okay? And here I have all the information. Just go there to my website when you finish. Just take a look and send me an email, okay? So this is okay, I don't know, this doesn't work. So let's see here. Okay, I don't know why this doesn't work. Okay. Okay, so I'm trying to send you the thing. It doesn't work, so okay, let's say here. Okay, let's see. Okay, here is here is my website and my email. Jeffrey, please go to the website, check everything, and if you need help, you just send me an email, and we will discuss this thing in private. Okay? Now, let's go to another question from Wiseman. He said, like how you explain in your training level 8 that stop loss isn't the only thing that you need to control risk, because there is other things to do before you put stop loss. Yes, wise men, yes, this is what I explain, and then I explain other things. Okay, so thank you very much. Hello, Vincent, how are you? Here we have another guy, Nazdin Anochi, how are you? Bonsoir, comment allez-vous? And Vincent says, what is drawdown, and do you use them to measure your return rate per year? No, see, Vincent, I'm not looking for whatever you say, like drawdown or something. For me, how do I measure what I made? In the 1st of January, you see your account. How much is your capital? 31st of December, you finish the year. How much you have? Okay? And then you see the percentage. Now you will find this in your broker. Okay? Here I'm not talking about tax and about thing, because this is a complicated thing, because in tax they use each trade by itself, and there are a lot of stuff. But for me, this is the easiest thing. Okay? Let's say you have $100,000 in the 1st of January 2017. Okay? 31st December 2017, you have 150,000. So how much you made? 50%. That's it. This is the easiest thing. You understand your performance. This is what you made. Okay? So don't follow other stuff, because they will just complicate things for you. But for you, in real, have you made $50,000 after the commissions, after fees, if you have used margin account, after all this, you have 100,000 in the 1st of January, 31st of December, it means the end of the year, you will find 150. Okay, you can go to your account in 2018, the 1st of January, you take, for example, $50,000 and you have fun with it, or you buy a car, or down payment for your house, or you do whatever, or you go, or you take this 50,000 and you make turns. You make turns over the year. You go to Japan, or to South Africa, or to France, or England, or Mexico, or Argentina. You go wherever you want. Okay? This is the money that you made, and you know that it is 50% of your account. That's it. Okay? So thank you. Thank you very much, Vincent, about this. Now, hello, Rikoshi and Sisi. So now it worked. So what's the thing that it worked? I don't understand. Okay, let's go and continue what we have done. Okay. Let's continue with the stop loss, which is the first thing. A lot of people, when they use a stop loss, they think that the stock should never go to the stop loss. This is not normal. So it means, for me, it means that you don't understand why you put stop loss. I will give you an example. Just a normal example. You can do it in your free time. You make a portfolio of 10 stocks. You just put stocks like this in the chart. You buy them, for example, just I'm not saying you buy them by real money. No, you buy them you buy them like virtually. Hello, Shmuel Berliner, how are you? So, this portfolio, you put 10 stocks. Each stock you put stop loss. Now, this is virtual. You just want to see what I am asking you to do in order to understand what I'm saying. Understand that some stocks in 1 week, some stocks will go up, some stocks will go down. It's exceptional that all your stocks, except when the market the whole market is doing good and your picks are very good. It means the stocks that you choose are very good, or they belong to one industry and it's going up. Okay? Now, let's say in the normal way, some stocks go up, you begin to make money. Some stocks go down, you lose money. Now, these stocks that they go down, if you put stop loss, you will exit them. This is what I mean by stop loss. Stop loss is just to assess your risk, how much money you are risking in the trade. Okay? It doesn't mean that when you put stop loss, the stock will not go down to your stop loss. Whatever you put your stop loss, sometimes the stock go to it. Even if you put 10%, 20%, 30%. Let's say you want to play the fool in the market. You say to yourself, I put stop loss, but I put it far away. So why you put it? The question is, why you put the stop loss far away? Let's say you put it 50%. Why you put the stop loss? This is the question you ask yourself. Is it you think that the market will not go to your stop loss in order to stay? In order to stay in the trade and you hold it? Let's say, I give you an example just to explain this. Let's say you buy the stock at $20. At $10 you put stop loss. Now, after 1 month, 2 months, 3 months, the stock is going down. It has never been going up. So since your stop loss is $10, what does it mean? It means you will be waiting. You wait 1 month, 2 months, 6 months, 1 year, 2 years, 3 years, 4 years. Let's say after 5 years, the stock from $20 goes to $10 and it hits your stop loss. Is it this that you are looking for? Is this swing trading or investing? Okay? So here you are totally wrong. You can use this in investing. We are not speaking today about investing, but I can give you an idea about investing, about risk in investing, because the risk is not the same. Now, we continue with our short-term trading, which is called swing trading, and this is what I teach. So, when you put a stop loss, it doesn't mean that the stock will not go down and hit your stop loss. It hit your stop loss either because the stock has been very volatile, and in this situation, if it hit your stop loss and it goes up and it's doing good after a few days, you can buy it again, because you have been wrong in putting the stop loss. Just because you are wrong, it doesn't mean that you don't do something good for your trade. Don't have this static mind or stubborn mind that you have a trade, you put stop loss, you exit, and next day it's going up, and then you forgot about it. You can buy it again. What's the problem? When you lose little money, let's say, as I told you, $20 you buy stock, $19 is your stop loss. You lose $100. This is your risk that you should do in a lot of your trades. I'm not saying $100 as a risk, but you can have whatever you want according to your trade position. Okay, it could be big, it could be small. So this is the first thing about risk, is the stop loss. If you don't understand the stop loss, you don't understand why you use it, you don't understand what are the criteria, what are the variables in using stop loss, you will be making the same mistake the whole year, and this mistake will make you lose a lot of money, but you don't know. You say, oh, I use stop loss, but I'm always losing money. It's just because stop loss. No, stop loss is not the cause of losing money. It is you, who either you don't know how to use it, or you use it falsely, or you don't know other things. Now, stocks are not the same. This is the second thing about risk. there are different kind of stocks in the market. So the stop loss should never be the same, even if the price is the same. So sometimes I have two stocks. Let's say both of them are $20. Let me explain. Okay? Let's say you have two stocks. They are the same. $20, $20. So, are you going to use the same stop loss? If you say yes, it means it might that you don't understand anything from stop loss. That's why I told you there are a lot of variables that you should know. Most of you guys, I know, most of you that you are here, you know my training level 6, how to calculate stop loss. You know what are the other variables. So here I'm just trying to explain in general what are these things. Okay, so the second thing I'm talking about is the kind of stocks. There are stocks that are volatile. They move fast up and down. Some they are lazy, some they are sleeping, some they don't move that much. You find a stock that it is $50, but when it moves 10 cents. This stock is very, very slow. Okay? It's slow. And you find another stock that it is $20. Next day it goes to 23. The other day it goes to 27. This stock is moving so fast. So understand that when you put stop loss, this is something very important. You know they are not the same, so the stop loss will not be the same. Okay? Now this is the second criteria that I am speaking about. I speak about stop loss. I'm speaking about the second, about the different kinds of stocks. Now third, it has a relation with your trade and your account capital. Okay? If you use all your capital in one trade, the risk will be more. Yes, you can make more money faster, but the risk of going down also will be faster. Okay? So there are some people who like risk too much. They don't care. So they use all their money and they search for very, very difficult trades and very volatile trades, like when you go to for example to penny stocks. Okay, the stock is let's say it is $2, and you go and you put $20,000, $50,000, $100,000 and you buy this stock. Okay, here you are doing a risky trade. Yes, you can make money, which is true, but you can lose a lot of money. So here it depends on your character. Are you a guy or are you a trader who likes too much risk, or are you a guy who like less risk? And you understand this when you trade. If you are always scared, you don't want to lose that much, so you are a guy who doesn't like risk. Okay, like if you go to mutual funds, people, they buy mutual funds, they buy ETFs, like the indexes. They buy indexes and they leave them. They say, okay, if the index gives me 5% a year or 10%, or it is down by 5%, I will accept it. I don't want a big risk. Because why? Why mutual funds and indexes have less risk than trading in stocks? Because stocks are very volatile. That's why you ask yourself, why in the 401k they don't include stocks? They don't include stocks because of many things. I will just explain to you one or two or three things in order to understand why is that. Because the guys who make the mutual fund, they don't want to include stocks because they will make no money from them. Understand that mutual fund takes percentage of the money. When you throw your money into mutual fund, the mutual fund price is going down a little bit with the percentage they take or the fees they take each year. So this, no one talks about it. But for me, I'm talking to you about this in order to be aware that there is a lot of things going there. Okay? So, the character, your character, as you want less risk or you want high risk, this is your character. This is number 3. It means your character. If you want less fluctuations, you say to yourself, okay, I don't want to mess with any stock. I will just go and buy S&P 500, for example, or Dow Jones, or okay, it's just like this. I just buy the mutual fund or the index, because when you buy the index, this you buy it with an ETF, exchange traded fund. An ETF, it is like a stock, but it takes less fees. Most of the indexes, ETFs, they take, for example, 0.50%. 0.50. You will see that when you want to buy an ETF, you can go to the ETF web page and you try to see how much they take from your money, because when you put your money in the index, there is a percentage that it is taken each year. Understand that? Now, for mutual fund, they take more fees. You find 1%, 2%, 3% taken each year, but they don't care about you. If this mutual fund is making money in the next year, let's say it makes 5% or 10%, they have already taken 1 or 2 or 3%. Normally your money is like 13%, but you find only 10. Okay, why? Because they take this percentage for themselves. That's why it is called mutual fund. And there is a manager who will take money, and his company will take money. There are fees you should understand in the market. But you, for example, we are not dealing with those. But you might, for example, buy, for example, an ETF. ETF, there are thousands of ETFs. Okay, an ETF, it is only a stock that you can buy or sell, like any other stock, and it tracks an index. Okay, let's say you want Dow Jones Industrial Average stocks, which is 30 stocks, 30 big companies that are called blue chips, 30 biggest companies in America. Okay, you want to buy the index, the Dow Jones index. You go to its ETF, which is called DJIA. You will find it. Just Google it. You find what is the ETF of Dow Jones. You will find it. Now it is an index. Now an index, it is a stock that tracks the index itself, because you can't buy an index. Okay, you can. Index is 12,000 or 13,000. I don't know how much is the Dow Jones right now. Is 12,000 something. Okay, so you can't buy that, but you buy the ETF that tracks the index. There are thousands and thousands of ETFs. If you are interested to buy ETFs, to trade with them, like swing trading, you buy and you sell. You can go to my chart that I use always, freestockcharts.com, and you can find a section where on the left side where you find ETFs, you find mutual funds, you find everything, thousands and thousands. Okay, you will be astonished how many we have. Okay, so some people this is number 4, they try to have less risk by buying ETFs and by buying mutual funds. You can also, if you want to, if you don't want a big change in your account, you can do that. But understand that these mutual funds or these ETFs, they are different. I will tell you an example. It doesn't mean that you don't lose money. Some people, they think that when you buy a mutual fund or you buy an ETF, it's the index. You don't lose money. No, you will lose money if you are wrong in the index. I will give you an example to understand. We have seen energy sector, the whole sector. If you have bought, for example, 2 years ago, you bought the index because it was going up many years ago, like 4 years ago. It was going up, it was good. I have traded a lot. I think 2017, 16, 15, maybe 14 and 15. 2014, 15, I was there a lot in the oil industry, drilling and gas and a lot of stuff. I have made a lot of money in that when the trend is going up for all these indexes and sectors. Now, one day, this sector, which is called, excuse me, this index, which is called energy sector, has been going down for many years, 1 year or 2, and then it goes up lately. Understand that if you put all your money there, it will be going down, because you don't put stop loss, because it is just the index. Understand that mutual funds and ETFs, if you are investing for the long run, you don't put stop loss, because you are looking for the long term. 1 year, 2 years, 5 years, 10 years, 20 years. You are looking for all these years. Okay? You are not looking to trade like we trade, like swing trading. Okay? So this is the 4th thing I'm speaking about, which is the choice of either mutual funds, ETFs, or stocks. Stocks are the more volatile. That's why in 401k, most of the 401k, they don't offer stocks. Sometimes a company offers its stock, yes, but most of the 401k, they don't offer you, okay? They don't offer you to buy stocks in 401k, okay? You understand, I have already spoken about that. Because mutual funds, you know, they go slowly up or down. So your account will be going down, you will going up through years. It's not that much, but it's going up. Because they take fees and because it's a lot of stocks. Understand that a mutual fund has many stocks. If you, for example, in your 401k, if you have it, like investment plan, you go to it, you will find where you are invested in. And believe me, this is a funny thing, that most of you guys, if you are working and you have a 401k or you have another investment plan, if you are in the USA, believe me that some people, they have never seen where the money is going. Sometimes the manager of the 401k in your company put your money into things that is not working at all. Is going down, but they put a lot of money in order to make these funds go up. So you are losing money for many years, 10 years, 20 years, 30 years, but you will never know. So it is high time, if you have some investment like that, to check it. This is just something related to the risk, because you are risking the whole life investment. And believe me, when you lose for 20 years or 30 years, all your money that you put is a loss. Instead of you are at $500,000 after 30 years work, $500,000 or 1,000 or $1 million you accumulate because you see where you put your money, and then you find 50,000 or 30,000 after 20 years or 30 years. It means there is something wrong. Okay, there is something wrong in your 401k. Now we have spoken about 4. Now we go to the fifth thing, which is I have mentioned but I didn't speak about, is your account itself. If you want less risk, you have many positions in your account. It doesn't mean when you say positions or trades that you should trade all the 4 positions, but no. I will give you an example. Let's say you have $10,000 and you divide it into 4 positions, 4 trades. Or you always take $2,500 and you buy stock with whatever price it is. Sometimes we have 100 shares, sometimes we have 200, sometimes we have 300 shares, depending on the stock price. But you stay disciplined and you use only $2,500. You don't do another trade and you use $5,000 or $10,000 and then you divide it again. And you think that there is something which is sure. Oh, no. I should put all my money in this trade. I am sure that this stock will go up. Let's say you put all your money into earning date. Okay? Earning date, it's for some stocks, it's very, very dangerous. So you should understand the risk. Okay? And this is number 5. Earning date, when you buy a stock, always try to check what is the earning date and try to check, is this stock responding to the news, yes or no? Now, how do you know that? It's very easy. You go to your chart and you extend it to 1 year and you see the 3 or 4 quarters and you see if there is gap up or gap down. It's very easy to see it. If this stock is not having gap ups or gap downs, it means that this stock doesn't respond too much. It means the traders are not interested about this stock. But if you go to Apple, if you go to Google, if you go to Twitter, last Thursday, when I do the trade and I have a gap up, okay, from $16 it goes to $20 something. So I am making around 20%. Okay, this is a big risk. Okay. So I assume the risk. If there is gap down, I will be losing a lot of money. But this is a risk that you should take if you want to. Now, if you don't want to, you have the choice not to trade it. You can check before you buy the stock. It takes you 10 seconds or 50 seconds or 1 minute. Just go to Yahoo calendar of earning dates or Nasdaq earning dates calendar, and you will check your stock. If you want to for the date, and then you go to the chart and you see in 1 year, does this stock respond to the news, yes or no? How do you know? It's very easy. You just see the gap up, and if there is a gap up, some stocks they have the earning dates and the company announces information, but there is no gap up or gap down. Because gap up or gap down, it means there are a lot of traders are interested in the stock and they are following the stock. Facebook, for example, Apple, Google, Twitter, and there are hundreds of stocks that have this thing. You can go and search for gap ups every day in some websites, and they will show you all these websites, all these stocks that have gap ups. Because gap ups and gap down, it's daily. But you will never know which is stock until you buy it, until you see it in the chart. So these are the 5 things I want to talk about. And number 6 is the size of the position. Okay? If you have $10,000 in a stock, or 50,000, or 100,000, or $500,000, or whatever millions you have, and you put it in your stock, this will make your risk higher and higher, but the reward is big. Okay? But if you lose the trade, you will understand that you will lose a lot of money from this trade. So the big size of the position is one thing. Okay, so I think we have talked about how to control risk, and I showed you 5 or 6 things that we have spoken about. Now, please, if you have some questions about risk, we can just begin taking questions before we go ahead and we speak about something else. So I'll be drinking some coffee before you get some questions. So controlling your risk is a part of your business. Okay, it's part of your business. Now I will give you an example. If you go to do options, for example, the risk is so high that you can lose all your money in one day. There are some people who are, because a lot of brokers in general, I'm not saying that the brokers who are the real problem here, but they make it easy that just come and do some and you will make a lot of money, but they don't speak about the risk, because they don't care about if the people are losing money or not. The main thing is that they go and they trade, they do transactions, they trade, and then they can make a lot of money. Before someone talks to me about options, and he says, "Oh, you okay? It's cheap." But I say cheap. The money that you put, cheap if someone. It depends on your position. If you buy hundreds of contracts about a stock, and you are putting 10,000, 20,000, 50,000 in this stock, and there is a gap down, you buy calls, for example, and the next day it is gap down. Believe me, this $50,000, it can become 20,000 or 10,000, and you lose all your money. All your money is gone because of the risk that you don't assess. Okay? Now, let's I speak about another subject in risk, in selling short. I always, in matter of risk, I always ask my students and all the guys who are here on YouTube not to short sell a stock for swing trading for many weeks or many months. The problem is that if you have a gap up, it means you are going down, and you think that the stock is going down, and you wait 1 week, 2 weeks. Let's say the stock is going down, but if there is a gap up, you will be losing all your money that accumulated, and maybe you will have a big loss. So going down in shorting the stock, it's a very, very difficult trade. And there are a lot of people who don't understand, especially when they go to penny stocks. Penny stocks, in shorting the stock, it is a no forever, especially when you do swing trading. Now, I will give you an example that you might not think about. Here, I'm speaking about swing trading in penny stocks. I'm not speaking about day trading, because in day trading, in the morning, for example, you see that a stock is going down, so you short it, you begin to make money, and then you exit before the close. It means before 4 o'clock. Now, this is is good because if you have experience, you will be making money from this. And a lot of professional traders, they do only day trading, and and most of the time they search for stocks that have problem in the morning, and if these problems, if this news, bad news for the company, they are searching for sell off. A big hedge fund is selling off a stock, so this you will see it in a big red candlestick going down. This is what I'm talking about. Some people are following these stocks in order to find this kind of things. Okay? So this is a good thing. It means if you are a day trader and you are following the short stock and daily, and it is your job and you like it, this is good. I'm not saying bad thing. That's why I have a training level 11, how to sell short stock. Okay, it will tell you the risk. It will tell you what to do, how to do the trade. Now, I'm speaking here about swing trading in penny stocks. I give you an example, but understand that don't say that it will never happen. It will never happen. No, anything can happen in the market, especially when the stocks are manipulated. Understand that these stocks that are small, $2, $5, $3, $7, $6, they are small, and if the volume is low, anyone can move them. Okay, anyone can move them up or down. Now, let's say you see a stock which is going down. It's $1. It was 110 cents, and then it's going down, and you have the idea. You have the idea to short sell this stock. You go in the morning, it begins to go down. It is, let's say, it is $1.10, and then at the end of the day, it begins to going down. But you get excited, and you begin to see $100 or $200 or $300 like a profit. This is what you see. And instead of taking your profits and exiting the trade, you say no. Why should I exit? Why I don't let it for tomorrow? Maybe it's going down and we make another 300 or 400, whatever. You close your position. It means it's 4 o'clock. You leave the trade like this. Putting stop loss or not, it doesn't work, because this thing maybe happen after the market close. There are news, or this company has good news, or just one guy who is a hedge fund and he wants to shake this stock. What does he do? He will buy millions of shares. Now, what will happen to you? Let's say the stock you bought it today at $1.10. It goes to $1. It means going down. You make money. Next day you find it in the morning. It is $5. Just an example. Please bear with me, because it is so important to understand this. $5. Do you know what does it mean for you? Let's say you put $10,000 in this trade. Okay? $10,000. In the morning, the broker will call you, and he will send you a margin call. This is some people, they don't know about it. They send you a margin call and they say, man, you have lost 5 times your money, so I need my money now. How much money you lose? You have lost 40,000 and you have lost your 10,000. Everything you have lost $50,000, because the dollar goes from $1 to $5. 500% loss. Now your money is lost. This is normal. But the broker, he lost $40,000, but it is your money because he gave it as a loan. So he will ask you about his $40,000. And after that, I will not speak to you, because you will have trouble in everywhere. So I'm not speaking about that. So here, why I am saying you this example is just to make sure you understand risk. A lot of people, they do a lot of trades. They lose all their money. Sometimes they go in debt, but they don't understand what's the mistake they do. They say, oh, there is manipulation in the market. Yes, but it is you who have done this, who have been in that trade. It is you. It is not the market. The manipulators, they don't come to your home and knock the door and beg you to buy the stock because they will do manipulation to it. And understand, when we say manipulation, it is something vague in general. It's not in the market, everything is fair. A mutual fund, they come to a stock and he buys millions of shares. Have you the right to tell him, no, you don't buy? He is free. He do what he wants with his money. Okay? So you should protect yourself. No one will protect you from the market. This is why I am doing my teaching you and giving you general information, and I have my training. It's just to show you that the trading is a big game. You should understand the game in order to make money and to be protected. If you are ignorant of all the information, how to control your risk, you will be making a lot of problems. A lot of problems for you, and maybe you'll be in debt. Now, Vincent says, big stock can also be manipulated by hedge fund. No, see, I understand. This manipulation, I'm not speaking about, you think that manipulation is something bad. No, it is not bad. It is someone who does what he wants. Okay, for example, let's say you are a hedge fund. Okay? You go and you short sell a stock. What's wrong with that? The guy who is a hedge fund manager, he wants to make money. When he is shorting the stock, other people, they come, they trade, and they short also in order to make money with him. So if the stock goes down too much, all of these guys who short the stock, they will make money and they are happy. This is trading, okay? This is not something which is wrong. You think that, oh, you say there is manipulation in the stock market. There is no manipulation. This is not a kind of manipulation that doesn't happen every day. There are short sellers that they short the stocks. Some they make money and some they lose money. Don't understand that a hedge fund is always making money. Sometimes he is shorting the stock, and then a mutual fund, he has more money than him, and he can buy everything that the other guy has shorted, and the hedge fund will lose money. So understand that it is not that if someone is big, it means that he is always making money. The proof of what I say is mutual fund managers, there are some who lose money each year. That's why they are fired. If you go and you check how these managers, some managers who make money, they say, okay, man, we give you money if you are losing 10%, if you are losing money, you just lose money that year, you will be fired. But if you are making money, more money, we give you more money. You see that? It's business. It's business. And all the people, they want money. But the money is not for everybody. The money is, when you understand the game, you will make money. If you don't understand and you are ignorant, you will be losing money. This is in general some stuff that I'm speaking about you, and I'm speaking about risk. So if you have questions about risk, or if it is risk or no, please ask me questions and I will be answering in a few seconds. So I will be waiting for just a few seconds and see you guys. If you have some questions. If you don't have, we will continue. I will continue speaking about I will continue to speak about something else, about the risk, as always. It's always about the risk. So, if you don't have questions, we will go to the next section. Okay? Next thing, we have spoken about stocks. Okay, I have a question from Vincent. He says, is day trading generally less risk than swing trading since you don't hold position overnight? Yes, this is another kind of risk. Yes, thank you very much, Vincent, for speaking about this. I have mentioned the gap up, gap down, but I will answer your question. It is true that in day trading, okay, since you monitor the trade and you check every minute and you are with the trade, that's why you need the morning off. Let's say if you want to do day trading, the best thing in stocks, okay, I'm not speaking about other things, about like forex or futures, because futures and which is called derivatives, like futures and forex, like currency pairs, when you trade them, you can trade them the whole day, night or day or afternoon or the morning. But in stocks, if you are doing day trading in stocks, you should have the morning off. It means you should be there where the activity of the stocks is very, very important, the morning, from 9:30 to 10 to 11 or 12 o'clock. Okay, this is the most important thing. Now, day traders, they don't have this risk of gap up and gap down. But if I ask you the question, Vincent, if I ask you the question, what if you make a gap up? I have made a gap up that you maybe you say I will be doing a risk in swing trading. Okay. I bought a stock at $78. Next day, it doubled. It goes to 135. If I ask you, Vincent, are you if you do this trade, if you, for example, it's you did this trade, are you with gap up or gap down? Yes or no? You will tell me yes, because you double your money. Even if you risking your money is something that it is very important to make money. Now, I'm telling you something about swing trading and day trading. What's the difference in terms of money? Day trading is like a fisherman, someone who fishes with a hook, is with one hook. You throw the hook and you try to see if you can catch a fish. So each time you spend 10 minutes or 20 minutes or 1 hour, you are doing this stuff, you are putting this hook and you throw it in the water, in the sea or in the river, and then you catch a fish. Okay? You catch only one. Let's say you have a net and you have a small boat and you put the net into the water, let's say in the sea or in the river or in the lake. How many fish do you catch? You will catch a lot of fish. This is what I'm speaking about. Speak that what the guy who makes money in one day, it's like one fish. But let's say this is a stock that it was $10, $20. It goes to $20, 25 cents. Now, this 25 cents, let's say if this day trader, he bought 400 shares, he will have $100 as profit. Just an example, okay? Now, but let's say another trader who bought this stock at $20, like the other one, like the day trader, but after 2 weeks it goes to $30. Who will be making more money? A second thing is in day trading, you are doing a lot of transactions. What does it mean, a lot of transactions? It means you are spending too much money and you are giving it to your broker. So you are feeding your broker. If you don't have a big account, you will just feed your broker each time, and you will never see the profits. Even if you see the profits, it will be eaten by the commissions and fees, because, okay, so you understand the game. But it is up to you. If you like swing trading, you do swing trading and you have the risk. If you don't like risk, you want just day trading, you do day trading. There is no problem with that. It depends on you what you want to do. But don't say it is less risk, because they do trading, and they can do losers and winners. It's the same as swing trader, okay? But as a swing trader, if you make money, the profits will be bigger. For example, the last trade of Twitter, I made around 20%, but the other trade I made 59%. Okay, so you see, I make a trade, I stay longer, and I follow the trade, I make a lot of money. 59%, it's a lot of money. I'm not telling you how much I bought, but it depends on you how much you have. But it's 59%. Okay? So try to be with the risk if you want to do swing trading. If you don't want, it's okay. You can follow the trend. There are some stocks that they don't have gap up and gap down. Okay? So just check the history of the stock and see. If these stocks have not gap up and gap down most of the time, I am not saying all the time, I say most of the time, go and check 1 year and see if there is no gap up. If there is no gap up or gap down, it means that this stock doesn't respond, and it is not followed by day traders a lot. Because day traders, they make the gap up, because in the morning before the market opens, they see the news and they just begin to buy. I have one time someone has done a day trade after the market close. Now I made a video. I say you should buy before the close. If the announcement, the company announcement, will be after the market close, you should do what? You should buy the stock and you should stay with your trade. You should look at the price if it begins to move up. If it begins to move up, it means that there are good news, and you can listen to the news by yourself, and you have your screen divided in two, and you listen to the news, the company news, and you see the chart, your broker chart, because it gives you the after when the market closes, it gives you the information. Okay? Because there are some brokers, their chart doesn't work after 4:30 or 5, so you should know. If you are a day trader, you should see the broker that stays too long in order to do this trade. So one of the guys, when I do this this video on YouTube, okay, it's not in my training, he buys some shares, 100 shares, I guess, about Facebook, and after the news, the stock goes at like 4.50 or something. It goes to $5 more. He sold his shares, and then he make $500, and he sent me an email. He said, Kareem, thank you very much. I have made $500 making this day trade right now in a few minutes, less than 1 hour. He made $500. Okay, this is a day trade. You don't have to stay until tomorrow to make the gap up or gap down. No. You should see where the announcement of the company. For example, last week with Twitter, the gap up was in the morning, and then it continues during the day because it was a good day. Okay, so understand that there is always a risk to take. If there is no risk, how can you trade? There is no way where you buy a stock or you buy a mutual fund and you say there is no risk. It doesn't exist in the stock market. Stock market is all about risk. Okay, so let me drink some coffee and then I see in the chat room what the people are saying, and then I can explain. So let's see. Artkov says probably less if using margin account. Hey Artkov, I'm just telling you that using the margin account is you double your risk and you double your reward. It is not less risk. I will explain. Artkov, since you speak about margin account. Let's say you have $10,000. Your margin account, it means the broker give you $10,000. So you have $20,000 in your hands. You go in the morning, you buy a stock. Let's say you make $1,000 in this trade. You put $20,000. You make $1,000. Just an example, okay? Now $1,000, what does it mean? It's $500. It is yours. It is from your money, and $500 it is from your broker money, okay? And you don't use interest rate because when you use margin account in the day, you don't use interest rate. So all this 500 is yours. So you are making $1,000. Now let's say it's the opposite. Let's say you put stop loss. Let's say you put stop loss at $200. From this $10,000, you put a stop loss at $200. But understand that you are not losing $200 from your money. You will be losing the other $200 from your margin account, which is $200. So you are losing $400. So you understand, margin account, what does it mean if you use the money? It means it will double your money, double your like buying power, but it double your loss also, because the loss, it is you who assume the loss. It's not the broker, because your money is only $10,000 and your stop loss is only $200. So you say, no, I will take 200 loss, but this the other 200, it is the broker. He will take care of it. No, no, he will not take care of this. You will take care of it. So you understand, Artkov, and hope you understand this very well, because you mention it. I understand that you are wrong and you don't understand this, but I just make it clear for everybody that margin account, if you use it in the day trading, what does it mean? It means you double your profit or you double your loss. If you are a good trader and you are making money, this will be very good for you when you use margin account. Very good for you, because by experience you are making money. But if you are just a beginner, there is no need. When you are a beginner, just you begin trading, just you begin training, there is no need to use margin account, even if you have it. Use only your money, because if you begin losing your money, you will be losing a lot of money of your broker, and then this money that you lose from your broker, you lost it yourself, so you double your loss. So in conclusion, use the margin account when you are a good trader and you begin making money. That's it. This is, I think, clear. Okay, let's see what Empty Mind, what does he says? I only use one side, buy, only not sell stock to make trading is easy and less risk. Yes, it's okay. It's okay. But there are some people, if you are doing day trading, some people, they like to sell short, because each day there are opportunities. Well, in the morning you open your chart, let's say you put some stocks, you find some stocks that are going down. If you short them and they are going down the whole day, you will be making money. And there is both ways. You can go long and you can go short. But for me, since I'm doing swing trading, I like the going long. I don't like to go down. Okay, this is not what I use. Frank Herdinez, hello Frank, I haven't seen you a long time. You say Forex? Yes. Forex is what we call currency pairs. Okay, if you do day trading in Forex market, or you do in futures, you have the whole day to do day trading. In the morning, in the afternoon, at night. So it is more than stocks. Now Vincent has says continue. Oh, Vincent have written a lot of stuff. Hey Vincent, let me read what you have written until I try to answer you. So Vincent says, I understand what you say. I do both day trading and swing trading. It depends on the stock. Some stock I day trade are very volatile and I don't want to hold it overnight. It's okay. Then he says, I day trade a few stocks where I put a couple of hundred in profit, but if I hold it overnight, I would lose thousands the next day. No, this is not, see. So why you are mixing the two styles? They are different. Vincent, you should understand. If you are doing day trading, you stay with day trading. And I'm not saying you stay all your life. No, the trade that you have done. What is your goal? What is your style in the morning? Are you doing a day trade or are you doing swing trading? Okay? If you are doing day trade, you take your profit or you take your loss and you exit the trade at the end of the day or whatever you want. So this is not swing trading. Why you want to hold for tomorrow and then you say you lose? Who tells you that you lose? You lose or you don't lose depending on the market. So stick to the style that you want to do and don't jump the position from day trading to swing trading. And why you want to hold the position? If you are having a loss, take the loss and that's it. You should put stop loss and exit the trade. So Vincent, I see that you are making some problem. The problem that you are making, and everybody else, a lot of people they do, is to switch a trade that you are doing in the morning. You begin to do a trade, okay, and then you say, "Oh, I hold it for tomorrow." This is not a good strategy. I'm telling you, you are mixing things, and mixing things makes you lose money. For us, when we want to do swing trading, we buy at the end of the day with a signal. We are not just buying in the morning. I have never. If you buy in the morning, it depends on yesterday entry, or if you want to enter in the morning. Okay, so don't mix the styles. This is what I want to tell you. Now Vincent says, day trade could also be profitable. Also, some stocks go up either 20% both way in one day. 20% is one day is also a very good thing. Yes, but I understand, Vincent. In day trading, it's not all. It's exceptional. You get 20%. Okay, 20%. It means there is something. There are news. There is a sell-off about like a mutual fund, a sell-off, or there is a big hedge fund who is doing shorting, okay, or there is some problem. But it doesn't happen each day. You find 20%. This is exceptional, and understand, Vincent. Don't make exceptions as rules. We are speaking about the general rules. Okay, you take any stock, okay, and try to see yourself. since you are trading, if you take the whole winners, try to see how much percentage you do. You can find 2%, 5%, 7%, but you don't find the 20% in the 20 trades you have done. They are winners. You find the 20% or 30%. Okay, you don't, except when you are doing penny stocks, and this is very, very dangerous. I'm not speaking about penny stocks, because penny stocks you can have even 100%, 200%, 300%, but you can lose also like 10%, 20%, 50 or 70%. So if you are doing penny stocks, okay. We continue our discussion. It says, with margin account, let's say you have $10,000, you buy a stock and sell it in the same day. You have to wait 2 days for money to be settled. That means you can't buy stock. No. Vincent, here you are wrong in one thing. Okay. This applies on cash account. If you are cash account and you have $10,000 and you buy a trade, for example, today, you should wait until the other day, not next day, the other day. It means they have changed it. Before it was 3 days. You should wait 3 days, but now you should only wait 2 days. For example, you sell today, tomorrow you can't buy, but the other day you can buy. Okay, understand that there is a change in the stock market. But if you have a margin account, you can do it. You can buy again, because margin account, it gives you 10,000 more, so they would not stop you. And if you don't believe, try to call your broker. Okay, call your broker and say, I have $10,000. I bought a stock today and sold it. Is it good to buy another today or tomorrow? Is it good? He will tell you yes. You can do that because you have a margin account. But understand that you can't do 4 trades in the week. When you do the four trade, you buy and you sell, you buy and sell, you buy and sell. This has to do with something else. Has to do with the trader, what we call the trader pattern. What does it mean? It means if you don't have $25,000, you can't do more than 4 trades in a week. You are speaking about something else. So try to understand that these two are different. Now, if you have $10,000, you have a margin account, you can do 3 trades. The 4th trade, they will send you a message and they say you are trading too much, and you should not do that, because there is a rule. The FINRA rule, it's not the broker rule, it's the FINRA rule that says to you, you shouldn't do more than 4, because you are thought as a day trader. If you are a day trader, you trade a lot, so you should have $25,000 and you trade as you like. This is the FINRA rule. FINRA is the organization that manages the stock market's rules. It is the organism that gives you the rules for brokers. Brokers are just applying the rules. They don't care whatever it means. They apply the rules. Okay, we have finished with that. Now we go to Vincent. He says, but with margin account, you can use your 10,000 to buy another stock. Yes, as I told you, you can buy another stock. You can buy 3 times, but the 4th time, in the 4 trade in the week, your broker will send you a message, and he will say that you are doing day pattern trader or something like that. So if you don't use more than 10,000, it is not any borrow money. No, they look for the trades. They don't look for the money. They look for the trades. So margin account is not a cash account. You are mistaken in these two. So try to ask your broker, call them, and explain to them what's the difference between cash account and margin account. I'm just trying to explain to you that you can, if you are doing margin account, you buy today, you sell tomorrow, you can buy and sell with a margin account. But with a cash account, you can't. There is a time of settlement which is 2 days. Before it was 3 days, now it is 2 days. What does it mean? It means if you buy today and you sell for a cash account, next day you can't, but the third day you can. You can buy again. This has been changed. Before it was 3 days. Now it is only 2 days. What does it mean? You buy today in a cash account, you sell. Then tomorrow you can't do, but the other day you can. This is the new rules. Yes, margin account. Yes, margin account if you want to trade more. Yes, it's very good than cash account. Yes, thank you very much, Vincent. Now we have a question with Alberto Luna. Hello, Alberto. How are you? How do you know a stock has good news or bad news, and how do you find stocks with the news? Alberto, if you are looking for earning date news, if you go to Yahoo and you put earning date calendar, you will find the calendar of all the stocks when they have their earning date. Now, what does it mean, earning date? It means the company will announce if the quarter of this company, how much money they make, and if it is good or bad. So it is up to you to go there, to go and to listen and to see if it is good or bad. Some stocks they respond, some other they don't respond. Okay, so where is it? Let me see. Okay, let me see. To continue. So thank you, Alberto, for this question. But as I told you, Alberto, you can go to Google and you put earning date calendar. And Yahoo has a calendar, Nasdaq has a calendar, and you put any stock that you want, any company. It will give you the next day, and it will announce you when they announce. Is it in the morning before the open, or is it during the day, or is it after the market close? There is someone who is an executive, and he will announce the news. And you should see that, and you should see the stock. If it moves up, it means good news. If it moves down, it means it's bad news. Most of the time, okay? But it is tricky. You should practice in order to have this kind of practice. Okay, it's not just you should learn. You should learn, and there is a big risk, because if you buy and you have a gap up, you can make a lot of money. But if it goes down, you will lose a lot of money. So you should understand the risk. And since today we are speaking about the risk, you should understand that you risk a lot. Okay, Vincent continued his questions and he says, I am trying to say, even if you have $25,000 cash account without margin account, and you use all $25,000 to trade in one day, and you have to wait till 2 days before you can trade again. I have no idea about this. Who tells you this? See, I will ask the broker, because for me, I don't know about this, but I am sure that the rule of the FINRA is $25,000. It's not because of the margin account. But we will see. Try to confirm that. Send me an email, and I will check my broker and ask, because I have never thought about it. I know about $25,000. That when you want to trade, they don't stop you. But cash account or margin account, I don't know. So I will check that. Thank you very much, Vincent. We try to Share the information and see. But for me, I have always, they never stop me, so I don't know. So Vincent says, you said the margin account is bad for beginner, and I am trying to say a margin account is good if you don't use the borrow money. Oh yes, yes. Here you mean you use your margin account in order to trade more. Yes, I understand you. Yes, this is good. This is good because you can trade the next day and there is no problem. Yes, Vincent, you are correct in this information. You are correct for day traders. But since most of the guys that are following me, most of them, they are doing swing trading. Okay, so swing trading, you don't spend that much commissions, and if you have a job, a day job or night job, you are not worried a lot about to be watching your screen for 2 hours or 3 hours or 4 hours and each day. Okay, if it is a passion and you like day trading and it is this is what you like and this is what you want to make money, yes, it's okay, because it is all depends on what you want to do. No one will oblige you to be a day trader, swing trader, or investor. Okay? Thank you, Vincent, for all this contribution with the other guys, Artkov and the other guys that are that have put in a chat their questions. Frank and Artkov and Empty Mind and all the guys that are here. Thank you very much. Now let's go to another risk, but in investing, which is another topic, okay? Which has related to how to control risk, because in investing also we have a problem of risk. Okay, it's not because you buy a stock and you stay 10 years, it means that you are making money. It's not. There is a big risk, and I will be speaking. This is the last point we speak about, and then I see if you have more questions, and then we can ask questions. Okay. Investing. What is the risk? Because there is no stop loss. So what is the risk of investing? Okay. Some people think that when you buy a stock and you leave it 10 years, it's obligatory to go up. No, this is not true. Okay? Some companies, you buy the stock, it can go bankrupt in 10 years. Some mutual funds, they don't like this company. It doesn't make that much earnings, and there is no development, there is no competition, and it loses competition. Other companies were bigger and bigger, and this company becomes smaller and smaller and smaller. And the mutual fund, they see that after many years investing in this company is not doing good. So what they do? They drop it. I will give you an example, a clear example. Twitter, for example. Why the stock was $74 and now it is $21? Why? It's just mutual funds managers, they took their money. It means they do a sell-off and they sell Twitter because analysts say bad about Twitter. Okay? They just say bad. And mutual funds, they are studying the market, studying what the analysts say, and seeing the trends, and they sell. Now, if the analysts is in the future, and if mutual funds are interested, Twitter will go up, and maybe it will become like Facebook. Okay? So it's just a game. It has gone up good, it has gone down good, it can go up good also. But in investing, okay, it is not a guarantee that when you buy a stock, a company, it means that you will making money because of the time you stay. Let's say you say to yourself, I buy this stock and I stay 5 years. Let's say you live for 5 years and then you see your stock. Sometimes you see your stock, you don't find it in your broker because the company go bankrupt. If you don't believe me, try to go Google bankruptcy in USA, and you will find thousands of companies go bankrupt. What does it mean, go bankrupt? It means your money is gone forever. In the stock market, all the money that you put in that stock, they can't pay you because they are not making money. So when they sell this company in the market, the money that they get, it goes first to the big owners. They take their money first. But you in the stock market, you have no money because they told you that there is a risk before. So understand that time, it doesn't mean you make money. Now, second thing, if you buy many stocks, some stocks will go up, some stocks will stay the same, some stocks will go down. So there is always risk to lose money. So this is what I want to say to you, that always there is a risk. And if someone tells you that there is zero risk when you do this, he is the biggest liar online. Okay? There is no. Whenever you buy a stock, it can go up, it can go down. There is no one who guarantee you. Is there someone who can, like mutual fund, or he guarantee you that each year you make a certain percentage? No one will guarantee you, even a mutual fund manager. Even if he is always making money. There is no guarantee. There is no guarantee, I'm telling you. They will not guarantee you something that they will know. Let's say we have a war in the USA between America and another country, and the stock market go down, and all the people lose money. Or there is what we call like 2008, when we have the crisis in financial industries. Okay? 50% of the market has gone. Even Warren Buffett, if you check his Berkshire, he lost around 50% of his money. But you tell me, oh, now it is good. Yes, but this guy, he is buying companies. He's not buying just stock market thing, because he is making money from his companies, not from just from stock market. Understand that? Okay? It was a very big crisis. Now, this is all for controlling risk. You have a lot to work on. So the people who are always thinking about risk, you can take a training level 6 and 7 and 8 and 19, which is how to manage your trading account. This training, I will show into details what to do. Okay? Because here in this video, I'm trying to explain general ideas, telling you how this risk is, and I will give more details on those people who want to understand how to put stop loss, how to follow the trend, what are the other things you can do in your trading account, and how you manage your trading account. All this stuff, you need to study them into details. Now, when you understand them, you will be aware of these risks. So when you want to trade, you understand what you are doing. And this is the most important thing in trading or investing or even day trading. You do understand what you are doing and how much risk you are taking. I give you an example. I hope this example will be so clear. Okay? So, let's say there is a war and you go to get a job as a soldier and you go to the war. Okay? So, what do you expect? How much risk are you taking? Here I'm not speaking about money. I'm speaking about just risk. There is a war like a Vietnam War or other like countries. Okay? There is a war And just a minute. Okay, there is a war, for example, and you want to participate in this war. I'm not speaking about patriotism and something else. No, I'm not speaking about that. I'm speaking just about the risk. You are doing the war, you understand that you might be killed. Okay? This is an option. You are doing war, you are getting to kill someone or someone kills you. Okay? So, how much the risk are you taking? You are taking 100% risk. It means your life is at 100% risk. Anyone who is mistaken, he kills you and you lose your life. So this is 100% risk. Okay? It's like a lottery. When you are spending $10 or $20 or $30, it's 100% risk. Okay? 100% risk. It means you are risking 100%. It means if you are doing lottery, for example, tickets, let's say you each month you like lottery and you want to be a winner in the future, like to have 100 million or 200 million. It can happen, okay? But it is a dream, and the probabilities of getting this lottery, if you won in it, the probabilities. It is not like trading. Trading is 50%. If you buy a stock today, tomorrow if it goes up, you will be making money. If it goes down, you lose little money. Okay? So this is trading. 50% you can win. But in lottery, it's 100% loss. Let's say you like lottery tickets a lot and you buy. There are some people who buy $102 from his paycheck, $200. They pay because they are addicted to buying lottery tickets. And they think that one day they will have 200 million or 100 million. So understand the risk that you are doing. All your money is 100% lost. Now you say to me the risk. You say to me what's the opportunity to make money. It is so rare. Because when you see someone won, how many millions and millions they haven't won? Let's say in America 100 million participates in this thing. One of them gets the money. All the other are losers. Okay? And the losers, they stay 10 years, 20 years, 100 years. Sometimes they die doing tickets and he will not get the money. So this is the risk I'm talking about. It means in your life, you should assess risk. You should assess risk. You should understand what you are doing in everything you do in life. In the job you do, in kind of jobs that are so risky, and there are some jobs that are not risky. So what is the thing that you choose in your life? Are you choosing risky jobs? Or you don't? If you like, for example, you have some ideas or something. Let's say you are a fireman, okay, and you do participate and you help people, and or you are a nurse or you are something else. Okay, you have this kind of things, but you are having some kind of risk. A lot of people who try to when there is like a fire in the forest, okay, some people they lose their life because of that job. Okay, so understand the risk and try always to think in terms of risk, because you are doing a business, and in trading is a business, either day trading, swing trading, or investing. It is a business, so you should know the risk before you do anything. Okay, so thank you very much for watching. We are nearly at 2 hours right now, so please ask your questions before we end this session. Wise men said, long-term investors that hold for 1 year or more, but if they see like 20% or more profit in, say, for example, 1 year or sooner, they exit right away. Are they doing right or are they doing wrong? Now, wise men, investing, it depends on what is your goal. Let's say you find a good company and each year you are making money. Why you want to exit? This is a very, very, very long investment. Okay? Let's say a company, 1 year it gives you 10%, the other years gives you 20%. Sometimes it goes 5% down. Another year it gives you 50% up. Okay, so if you are making money, it depends on your goals. What is your goal of the investment? The goal of the investment, you do it before you buy, not after you buy. Okay? It's not just you buy a stock and then you hold it for many months and then you say, oh, I exit or I don't exit. This is not really investing. And understand, wise men, that investing, you need to know about the company. You need to know about the company. You need to know a lot of stuff about competition to this company. You need to know what this company is doing. Has it a chance to go bigger and bigger and bigger? Or is it a small company that doesn't grow anymore and the stock will be going down and you lose money? So understand always understand what is your goal from this investment. Sometimes you buy five companies, or let's say you buy 5 companies and you know that these companies are good. You do your homework. You understand that this company in terms of competition, they are good. Okay? Let's say Facebook, it's a good company, it's expanding, you see the stock is going each year more and more, so this is a good company. Okay? But it doesn't mean that in the following years it will be good. We don't know. So, but if you like it, you can do an investment. Okay? And each year you see how much Facebook has given you. Okay? But if you like it, you can stay more and more. So for me, I have this favor. If a company is giving money each year and I see that it is good, I will stay. Why should I sell it? Like Warren Buffett has done. Some good companies he kept from the 50s, from the 60s, 70s, he kept. Like Coca-Cola and Geico and the other stuff. He will never sell them. Now you ask me why? Because he's making profits each year. Why he want to sell them? And he has a big chunk of the company. Because if he take his money, the company will collapse, for example. Okay? So he likes the company and it is giving him money all his life. There are sometimes when we have the market, the whole market is bad. This it is for the whole market. This is a crisis. This has nothing to do with the company, or it has to do with the whole market. Like 2008. Everybody has lost about 50%, 40%, 70%. It's just because it is a bad year. But after the years, the stock regain the profits and they grow normally. Okay? So it's a long investment. So wise men, it depends on you. You should make a plan. If you are doing investment, you should make a plan. If you have from your job, you have 401k and you want to do that, it's okay also. It means do what is good for you. But that's it. Juan Diaz. Hello, Juan Diaz. I don't see you before, but how are you? Do you use a stop loss all the time, or do you have getting stop loss out? Now, see, 99.99 I do a stop loss. Always. Okay? In some very difficult trades, I don't put stop loss, but I know where to exit. Okay? But I monitor that and I check daily where the stock goes. But all my trades in swing trading, almost all of them, 99.99, I put stop loss. Because if you don't put stop loss, you think that the stock will go down and then it goes up. But who tells you that the stock will go up? Okay? understand the risk. And if you are interested, Juan Diaz, if you are interested, you can go to my training level 6, how to calculate stop loss, and you can study this training and practice. And you have questions, you can tell me. So here is my email and my website. If you need any help, okay, you just send me an email or go to my website and check. Now I have another question from Hassan. Hassan, how are you? This is very good. I see you here, Hassan. Hey Karim, can we do the opposite of your strategy if we like or short? No, it's not the opposite of my strategy. No, I have two strategies to sell short. Maybe you haven't seen my training. Go to training level 18. How to short all the markets and indexes. Training level 18. Go to the bottom of the videos and see training level 18. This I use ETFs in order to short the indexes. I'm not shorting the stocks, I'm shorting the indexes. Now, if you want to short a stock, this is a day trading. You can go to training level 11. How to sell short a stock. This is a day trading. Yes, I do. It means it is short selling. Okay? But this is a day trading. But I don't sell short in the swing trading. Okay? But I use either training level 18, which is how to short the whole index or the whole market or indexes or sectors. This is something special. You can you can go and check this training level 18, or you can go and check training level 11, which is how to sell short a stock, and you study it because it is a day trading strategy. I will show you techniques, how to do it, and the risk that implies. Okay? So another question from Wiseman. Please let me drink some coffee and then I continue. Okay. Wiseman asked the question, I am only interested in swing trading, but I heard of some long-term investors do this. Just wanted to hear your opinion. Okay. Now, you are telling me to short the stock for a long time. Okay? Understand the risk. Okay? You can make a lot of money, yes. But for me, I don't do it. I don't do shorting stock for swing trading. Now, why? Because if the whole, it depends on your strategy. If the whole index or industry that it was in and all the stocks are going down, yes, it is a good thing. Okay? So you can do that, no problem. When you see a stock is going down, like is going down, and you want to short it for the long run, you can do it. But understand that when you short, you are paying interest rates. Try to see your broker how much you pay, because some people they ask you 7% or 6% or 10%. This is a big interest rate. So understand the interest rate when you are doing shorting. Okay? Now, if you do shorting stocks in a day, there is no interest rate. It means they give you the loan, which is margin account, for free. You don't pay interest rate, which is good. That's why some people who are day traders, they have all margin accounts because they short the stock without paying. But if they make money, it will be very good for them. If they don't make money, they double the loss. So it's okay. Okay? So Wiseman, if you have some questions related to short selling, you can send me an email and we can discuss this in private, because maybe you have an idea or you have heard something. We can discuss it in details. Okay. Hello, King of Calm. How are you? King of Calm has said not having more than 10% of your funds in a single trade. Now, understand, this is called position sizing. It depends on each person, how he divides his account. It's not 10% or 5% or 20% or half or 50% or 100%. So this, it is not a rule. Anyone can make his rule according to his risk. If you want to understand this, King of Calm, you can see training level 8 or training level 18. No, not 18. It's 19. How to manage your account. Sorry for the 18. 18 is false. Now, 8 is how to minimize risk and how to maximize profits. This is training 8. It gives you how to divide your capital according to your risk, not to my risk. It shows you the criteria. It shows you the variables. Okay? It shows you the variables. So, go to training level 8, which is how to minimize risk, how to maximize profit, or you go to 19, how to manage your trading account. So I will maybe write it for you, because you don't be mistaken in the thing. So training level 8, how to minimize risk and maximize profits. And the second one you can do or, because they are the same, but there are some differences if you want. So it's training level 19. You see the thing, how to manage your trading account. Okay, so this is 19. You try to check them by video or by ebook, and you can study them. And then if you have any question, okay, if you have any question, you can send me an email or check my website here. Okay, so here is the training and the website. Okay, now let's see if we have another questions. So King of Calm, please check the 2 training that I have given you, and go to my website and check them. Choose any one of them. They are both the same, but there are some differences. You can take training level 8. You study it by videos, and then if you have more questions, you should ask me and send me an email. Okay? Now, Sam Bar has say hi Sam Bar, you come late. We are at the end of the session. Next time, please come before, or tomorrow you can watch all this video with all what we have talked about. We have talked about a lot of things. Okay? Now, your question is, can you please explain why is buy stop limit on code? Yeah, man, why you are complicate things? You complicate things to yourself. You should use only buy stop. Buy stop on code, what does it mean? It means, let's say now the stock is $20. These are used by day traders. The stock now is $20. You say if the stock goes from $20, it goes to $20.05, I will buy that price because the stock will go up, because you have strategy like this. Okay? Now, you use buy, stop, and quote. Not buy, stop, limit, because limit, if it goes so fast, you will not enter. Limit, it limits the price. If it is not this price, you are not going to buy. Okay? This is according to your strategy, but I don't know why you use buy, stop. If you have strategy in day trading, yes. But I don't know why, because for us, we are swing traders, we don't use buy, stop. We don't use it. You just go to the end of the day, you find a stock at 3 o'clock or 3:30, you do the search, you find the stock, you just go and buy it. Buy limits, it means you just go and buy it. There is no need to, you can even buy it by market order, it's just you buy it. So you don't need to put buy, stop, or buy limit or nothing like that. Just limit or market, you buy it. And then you put stop loss. Now, Sam, if you are looking to do day trading, you can check training level 12, how to day trade using the chart and candlestick. So it's training level 12. You just go to it, you find techniques if you like day trading. If you want to do swing trading also, all my training are for swing trading. Oh, you said you just took off your work. Okay, no problem. But see, Sam, if you are interested to learn all what we have talked today, which it's a lot of things about risk, please, tomorrow you find when the video is processed on YouTube, you can go to it, which is live stream 29, how to control your risk, and you can watch it all if you have time. If you don't have time, let it when the weekend or when you have time, or whatever time you have. Thank you, Sam. Thank you, Sam, for your question. So we are now at the end of the training of the session about how to control risk. As I told you, you can check this training, which is training level 6, 7, 8, about stop loss, about how to follow the trend, and about how to manage your account, which is 8. Training level 8, how to minimize risk and maximize profit. All this training gives you more information on how to do it. Because for me here, I have explained in general all what I want to explain, but details on how to do it, you should go to the training to understand how. It's not as easy as you might think, but you should just take the training. Okay, so before we say goodbye for this session, and if you have questions, please write them right now, or even if you have questions and you want to send me private questions because you forgot about your questions, just send me a question. And here is my email, as always, and my website. You can just check. And before I leave, there are a lot of people that maybe they don't see. I have made 2 subscriptions. Please go to my website and check them. It's a very best deal about the search and about all my training. There are 2 kinds of subscriptions that I have done new, and you can just check them. If you are interested, you can subscribe, and without maybe with training or without training, you can get what you want. Okay, so thank you very much. Hope you enjoy your weekend, and as I told you, if you have questions, just ask. If you are looking to check the subscriptions, silver and gold subscriptions, or all my training, you can just go to my website. You have a question, I am always here. You can even use my my Facebook Messenger. You can send me. There are a lot of people who are now sending me messages by Facebook. You go to my page, you go to my website, you click on my Facebook page, and then you will find how to message me by messenger, and then you can check it. It's like a text message, and you can send me whatever question you ask or any inquiry. Okay, so thank you very much, and hope you enjoy your weekend. Hope to see you again, and see you next